Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the Accountant's Minute podcast. The time is now. Evolve beyond compliance. The time is now. Evolve beyond compliance. This is based on Accountant's Minute 398. You know, for years, accountants and bookkeepers have focused primarily on compliance, but that is not enough to sustain your firm's future. The landscape is shifting. Businesses need more than just tax returns. Businesses need advisors that can help them navigate financial, commercial, management challenges. The failure rate of small business is escalating. The Australian Small Business Ombudsman released a report about 2 months ago, which highlighted the worsening situation for small, medium enterprises in Australia. Even though there are 2 million businesses under the category of SME, there are a lot of problems. The last couple of days, newspapers have reported on the problems in the building industry. Thousands of small businesses have gone to the wall. Things are out of control. And SMEs need some assistance. Think about who's going to give them assistance. It's not going to be a government. It's not going to be big business as such. They need better foundations on which their businesses are based. They need an accountant in their corner. Now, most of them are not big enough, generating enough money to be able to afford a full-time accountant or chief financial officer. But they need an accounting person in their team, on their side, analysing the figures for them and giving them the information. That's the challenge. And as we've got all this happening as well, of course, we've got the realities that really directly affect the accounting and bookkeeping professions. The warning signs are clear. At Xerocon 2022, the former tax commissioner, Chris Jordan, issued some very blunt warnings. He indicated that work requirements will drop off due to the ATO's uptake of technology. He said that if your business model is high volume, low margin, and tax focused, it won't be viable in 3 to 5 years' time. So we need to now change those figures to say 6 months to 2.5 years' time. So it's quite concerning for many people, isn't it? Is what's going on. But where are you going to get the extra work from if you don't look at advisory services? You're not going to get it more in taxation work. That pipeline is reducing. Last week, I attended for 2 days to a very interesting series of videos that were presented by Accountants Daily. Pardon me. And one of the keynote speakers was Mark Wickersham, who was a chartered accountant originally in Sydney, who in 1999 saw the light and decided that he had to become more proficient with value pricing. And he threw the 6-minute unit recordings away and become a value pricing expert. I gather working out of London and advising clients all over the world. And he's also become a ChatGPT expert. And he's very supportive of AI for accountants. And he made some very interesting comments. Compliance work as we know it today will disappear before the end of this decade. And he also indicated, and it could happen beforehand. And he asked the question to his fellow accountants, how can we create more value? Accountants need to deliver more value services. So that's my question to you. How can you create more value? How can your team create more value? How can your firm create more value? Where are you going to get the clients from to do that? The tax commissioner is saying there's major changes going to occur within 6 months to 2.5 years. A gentleman who had an accountancy firm in Sydney and then saw the light on value-added strategies and now lives in London, also indicated that compliance work as we know it today, and he referred to both accountants and bookkeepers, will have disappeared by 2030, by the end of this decade. So when the Olympic Games are held in Brisbane, hopefully they will be, in 2032, accountants will not be anywhere near as preoccupied with tax returns. I don't believe tax returns are going to disappear forever, but a significant amount of the work is going to reduce, according to a lot of people. What are you going to replace your fee income areas with? One of the challenges that Chris Jordan also put out to accountants 2.5 years ago was to become the trusted advisor, to become someone that your SME clients can talk to about more than taxation. You know, to be brutally honest, taxation returns do not help any of our clients run better businesses. In fact, I doubt whether they really contribute to any aspect of running the business. Clients need far more information. Just have a look at what the larger businesses need. They all employ qualified accountants, don't they? Sometimes quite a number of them. They don't sit there just preparing profit and loss accounts all day on a monthly basis. They prepare weekly reports. They prepare key performance indicators and business metrics analysis. They compare trends. They're obviously on top of budgets and cash flow forecasts and comparing the actual performance. So they've got a variance report. But let's just stop there. Do you prepare any of that for your clients? And I'm not trying to be overcritical here. I'm trying to illustrate to you there are opportunities to present additional services. And once you start doing it and establish confidence from your SME clients that you can deliver these services, I think you'll find that they're very happy to receive them and to pay your fees. But it's just not a matter of switching off on a Friday night and saying on Monday morning, I'm now an advisory firm. I'm going to supply advisory services. You need to start the journey now, getting ready, getting the confidence of your clients, communicating with them so that they have confidence that you can assist. In my career, I've been the Chief Financial Officer and Company Secretary of a listed public company. I worked in the sort of environment that I am proposing that you all work in, supplying CFO-type services to your client. It's just that I think you will be working for a number of clients, probably 10, 20, at a partner level in a firm. Whereas in a public company, I worked for the CEO and I was part of the leadership team. Every day I spent hours in meetings, analysing results, analysing budgets, analysing data we'd received from overseas, putting a financial angle on it. A lot of the work was done on costing exercises. Could we change this? Could we change something else? We were in the meat industry. We had export meat works. We had retail butcher shops. We had small goods factories. We had storage facilities. Had some cattle properties. And I spent a lot of time, and my support accountants, I had 13 of them situated around Australia, was supplying information to area managers, and a lot of that was channeled back through the CEO. Who does your SME client go to for that sort of advice? It really wasn't rocket science, but the CEO or the area managers needed that information. They needed it to make their decisions. Once they had those facts and figures, and you or I would have certified it to them to say, well, that's the position. We thought we were going to make 38% gross profit percentage in this particular operation this week, and we've only made 22%. And here's what we think's caused it. Wasn't my role to then go and fix it. It was the CEOs or mainly the area managers, had to then go and talk to the manager of that operation and work out what went wrong. Why? Why do big companies go to this sort of effort? Because the whole meat industry runs on the same basis, and plenty of other businesses do as well. Since I found that Woolworths and Coles prepared detailed analysis at the end of every trading week, and they've got it by Monday afternoon, Tuesday morning, so that the general manager of that store can sit down and talk to the various managers. Some of them have got 42, 44 departments in them. Analyse the results. And if there's problems, fix them. The missing link with small businesses was we are not concentrating on what happened yesterday, the day before that, the 7 days. What happened in those 7 days? Let's look at it, analyse it, advise our clients where the problem was or what the result was, and say, well, someone's done something wrong. Someone's done a miscalculation. Someone didn't do the stock take correctly. Someone committed fraud. But we need to pin it down so the problem is fixed, so it doesn't continue to occur. Because just think about it, in your SME clients, they have a problem. Do they even know they only got 22% instead of 38%? I somehow doubt whether too many of them would know that. Because in the bigger organisations, they need an accounting input for that. So without that, they just continue on. Now, if it was a one-off accidental error, that's all right. It won't occur the following week, hopefully. But there's a strong possibility, and I've seen it time and time again, that problem continues week after week after week. It might go for a full year, and then it could go for another 6 or 7 months before the tax return finally gets prepared. And you sit down and talk to your client and say, oh, something went wrong. We thought, the last couple of years you've been 37 to 39% GP percentage. You're down around 22, 23% this year. It's too late then. Even if you can go back and find that error, hopefully someone can, you've lost all that money, or your client has. That's a vital role for you to be performing. And then there's all sorts of other things, of course. Looking at the effectiveness of the debtors system. Do they understand the debtors' days outstanding? And is the information being fed to the leadership team? Do they want to look at the possibility of raising some capital? Does the future cash flow forecast say they're going to have problems in 7 or 8 months' time? Are they interested in trying to raise crowdsource funding, raise $1 million, $2 million, issue some shares? Beef up their board of directors. There's plenty of work that you can do for them, but you have to start looking and analysing it. We can help you in this transition. I've spent my entire adult life in accountancy. As a senior partner in an accountancy firm, where we had about 50 staff, I had 3 partners. As a chief financial officer and company secretary of a listed public company, which taught me a lot, dealing with public company directors can be a wee bit challenging. I was a consultant to a major Australian government program, the first one the government really introduced to help small companies get ready to raise capital. They had to have innovative products or services. It was pioneered by John Howard when he was Prime Minister, and he insisted that the delivery team had to be people from free enterprise. The bureaucracy ran the back room, but the front room, the dealing with the businesses that wanted to get themselves geared up to learn how to make investment presentations, to make sure they had business plans, budgets, cash flow forecasts, valuations. They could stand up and talk for 10 minutes and then answer questions so that investors might back them in their businesses. This is the sort of role that accountants can play. Every time I run into an accountant in the street, or I talk to someone on webinars or by telephone anywhere in Australia, I get told that there's big problems on getting and holding staff. Talent attraction and retention is a huge problem. And I say, well, what sort of work are you doing? Oh, you know, tax, superannuation, bit of financial planning. I said, what about helping your client make money? By helping them analysing their performance, by putting in a 52-week business enhancement system. So there'll be daily reports, weekly reports, monthly reports. And then the process starts again with input from you, not only once or twice a year when you're doing the tax return. Oh, haven't thought of that. Don't you think that work would make it a little bit more interesting for your smart young graduates that are now working for you? Give them interesting and challenging work. Andrew Geddes, who I think is the guru of the Australian accounting industry, one of the joint founders of the Financial Management Research Centre at the University of New England 40 years ago, is a strong critic of the way accountancy firms have been run. He believes these young graduates should be put into this key product description of helping the businesses make money. Not being a recorder of past events. When we're not historians, we should be projectors of the future. We should be the storytellers, because we've got the tools to be the storyteller. The predictive accounting reports, budgets, cash flow forecasts, projected balance sheets, the key driver accounts. You know, what's the level of inventory going to be? What's the level of debtors? What is the debtors' days outstanding? What's the cash flow forecast telling us? How can we fix that? There's plenty of work to be done. And I know not everyone's going to be in agreement with what I'm advocating, but please think about it. Please think about it. ESS has advisory tools ready for you to use. Client communication tools to help you communicate to your clients that you can do more work than just tax returns. Financial advisory resources, the packages that are available for you to immediately start using. And in this edition of Accountants Minute, we've identified some of those packages that we've developed that you could start earning income from within a week of paying your subscription to ESS BIZTOOLS. If you'd like to have a discussion with me about any of these issues, please send me an email and I'll set up a complimentary Zoom meeting with you. Send me the email, please, peter@essbiztools.com.au. Stay safe, good luck, and please think about your SME clients. How can we help them run better businesses? It should be the mantra of every accounting firm in Australia. I'll talk to you again next week. Thank you.